Hey guys, what is up? It's Dusty here and welcome back to another crypto video. And as you guys probably know, if you're a crypto holder, you have to be very afraid, or rather careful and suspicious with a lot of things. There's just so ridiculously many scams out there. Gotta give y'all a quick warning as well. If you're being contacted by any influencer, chances are that's a random person trying to steal your money. Today's story though, at least partially, is about some of this shenanigans. There's a couple of hacks that have occurred, well, supposedly, that are pretty interesting. But not talking about hacks, there's actually a lot of things that are ethical questions right now. In a certain sense, the question of how much money should people be able to allocate to a risky asset class, that question is becoming more and more important. Should the people be free to spend money however they want, or should they be cautioned? Or conditioned rather, or put into a situation where they can't mess themselves up financially too bad. To give a little piece of context, a lot of you guys watching this right now are not able to buy Ripple stock. Why? Well, because you don't earn $200,000 a year or $300,000 as a family or have a net worth of $1 million. And that kind of sucks. So purely because you don't have enough money, you're not able to make money through buying these private companies. It's kind of funny, right? On the other end, a lot of people don't know what they're doing and the regulations are set in place. So people just don't mess up their entire lives investing into something that they don't understand. My only reason for saying it's counterintuitive is because you are allowed to gamble, which kind of like makes this entire situation oblivious. You guys probably understand as well, right? If you're able to gamble and just throw all your money into the garbage bin, well, then you should be able to invest in these newer companies, which, even though I don't think percentage-wise have a good chance to survive, well, it's better than, 50-50, I guess. It's actually not better than 50-50, but at least you are investing into something with, very often, at least some actual use. Alright, so let's cover this situation first. Acala exploit causes Polkadot-based DeFi platform stablecoin to drop 99%. And actually, there's two things to say. One is I try to put timestamps down below always, and I'm having a $10,000 giveaway. Just check it out below with the link and check out every single thing you can do to enter. You only have to do one, but check them all out. So, hackers used an exploit to mint $1.3 billion worth of AUSD tokens, prompting the stablecoin to lose its peg to the US dollar. Another stablecoin bug. This was a very big problem, people got very scared, but pretty recently afterwards, take a look at this. So, Acala recovered 1.7 billion AUSD in its second trace following an attack that minted billions of tokens. Combined with an earlier trace that recovered 1.3 billion AUSD, Acala has now recovered nearly 3 billion tokens. The project plans to publish further trace reports in order to help the community form recovery plans, but it's like, okay, they were completely screwed before, we were kind of scared, but they fixed it pretty properly afterwards. They're also trying to go for some burn and whatnot. And the reason I'm covering this is because you gotta understand, a lot of these stablecoins are only good until something very small happens. And with let's make this a good little overview. With the US dollar, I don't think it's necessarily safe, but the chance of them making one specific little mistake right here or one hack is rather small. What you're just knowing with the US dollar is that you'll gradually over time lose money, lose value. With stablecoins, they're pegged to the US dollar, but then they also have all this risk of being hacked and whatnot. They're not necessarily a better choice than just going to fiat. But take a look, the burn is actually pretty successful that they went through. AUSD is now valued 0.85 instead of 0.01, which is what all the people at Luna wanted as well, but for Luna that did not work. Let me know down below, are you still holding Luna? It's interesting to think about. Now, to stay on that topic, right, of warning you guys about these things, I read something here, you guys can see it now, and I'm pretty suspicious of what I'm reading right here, alright? I'm not sure if I'm being overly critical, call me overly critical, right? But former hedge fund manager alleges he lost $450,000 in crypto from a virus. Now, it gets a little bit more interesting, alright? Former hedge fund manager Martin Shkreli claimed the massive crash of his crypto Martin Shkreli Inu, that might have already been an indication that you're buying garbage, but alright, was due to a hack that emanated from an attempt to download a file. This comes after the token plunged by over 90% following a dump from a crypto wallet linked to Skrill. The wallet offloaded its holdings of 250 ETH, approximately $450,000, and interestingly, the dump occurred after the token had attained a weekly high. So let's relate this back to Ripple and the lawsuit for just a second. I know there's a mosquito. No! Too bad. Let's relate it back to Ripple, as I said, because I do this pretty often, but it's pretty critical, I think, because I personally believe that the Ripple lawsuit is the most important lawsuit in crypto by far right now, and everything in crypto kind of revolves around it. Now, to kind of flip back to the article here, Ripple case may have just exposed the SEC shortcomings as XRP outlook flips to super bullish. I think everybody is pretty excited about XRP/Ripple right now. Note that they're two different things. Ripple, private company, XRP, a cryptocurrency. Not the same, even though I kind of use both in the title very often. It's my bad, it's my shortcomings, I guess. It's because a lot of people just look up Ripple news, for example, while they're looking up XRP news and vice versa. It's just for keyword usage, even though I properly know the difference. And I hope all my viewers do as well. But I think a lot of people are bullish right now because they've gotten victory after victory after victory in the lawsuit. And a lot of that has to do with the fact that they wanted to get more information out of the SEC. The SEC was like, nah, we don't want to give it to you. But the judge is like, well, you got to hand it over to Ripple. So yeah, obviously people are excited about that. But the more to the point that I'm trying to get towards is there's so much criticism towards Ripple. Like in the video I covered earlier today, where Ethereum is kind of making fun of Ripple for kind of criticizing, where afterwards we noticed, okay, nobody in the XP community, okay, let's say the majority of people in the XP community are not mad at Ethereum. They're not saying Ethereum is shit. They're saying, hey, Ethereum is pretty good, but it has a couple of some very strange points. Why is the SEC not looking at that? You know, for example, the fact that it's China controlled, but in terms of mining power, right? And then Ethereum got all defensive, where in reality, we all know Ethereum did get preferential treatment. We're wondering, why did XRP get such a hard treatment? Specifically when these laws are so old and don't make a lot of sense. But then a lot of things that are really easily claimable as just straight up scams meant to steal people's money, albeit kind of small. We can kind of draw that out a little bit further. Why aren't those being taken a good look at? And I like to kind of discuss this, right? Senator, for example, this article asked the FDIC about allegations it discourages bank relations with crypto companies. You got to understand that this is not by definition a bad or a strange policy. Look at this article from a little bit earlier. Quebec Pension Fund loses almost entirety of its Celsius investment in less than 10 months. Why? Well, they invested in Celsius, it went completely bankrupt, which not that many people thought it could. And the same thing, of course, went for 3 Arrows Capital, went for Luna, went for a couple of those other lending guys that I kind of forgot the name of right now, but you most likely know watching this, you smart ass. But in all seriousness, there's a lot of things that should be considered in crypto. I just think one of those things which is pretty certain is that XRP is not a security and that there's a lot of scams they could go after, but they're not. Even funny enough, the ICO realm, I don't think they really should be going after that too much because you might say it from this perspective, right? An ICO is by definition unregistered sale of securities, sure, so it's illegal, let's go after them. And I get that, all right? And I can respect it if that's the way they want to do it. But then why not go after Ethereum? They're saying, well, but that was a long time ago, that's now fine. Where do we draw the line? Put that down on paper. And why is it not clear exactly where the line should be or how that should work? And why is then an ICO illegal, but also kind of not? Because Ethereum could do it, but others can't. So why? And why aren't they kind of skipping all that maybe stuff and, oh, they got some money to build their project, which is now prospering and doing amazing. Why aren't they going after those guys that literally went bankrupt or stealing money or just basically are losing people money hard in a negative way, that had negative intent and really try to scam people, if you guys get my drift? No, they're focusing on taking things that people are making money on, which is so counterintuitive. Then again, I like to address this multiple times. The SEC is just garbage at their job, but they don't have a bad job, all right? Get this clear. They're being garbage at their job, but the job that they were appointed is not bad. The SEC is pretty good as an entity because they're supposed to protect you and I, right? Specifically in the US investors, but you understand. So the reason they're garbage at their job is because they're hurting us more than they're helping us. The reason it's not bad is because, well, otherwise you'd probably see a lot more of this garbage ass where just a company, any company is just going bankrupt, stealing your money, stealing your money, and nobody will be doing anything about it. However, it's something I'm not completely sure of. The question of, for example, should a loan to a crypto company or Should a loan to a company that wants to invest into crypto be handled differently? I guess it's always a risk profile, right? And if crypto they found out is riskier than any other investment, then yeah, I think you can actually handle a loan differently depending on it, which is what this little part right there is about. But I think that's logical. It's all the business of making money, and if your money is more at risk, I think you can discriminate in that sense. I should say differentiate. Another warning maybe, even though this is not necessarily bad, it is actually. New research claims insider trading at Coinbase. As I put over on Twitter, there's a new study at some University of Technology Sydney, that are saying, hey, we're taking a look at the data and there's more insider trading going on at Coinbase. The reason this is bad is because, well, they're buying it just before it gets listed and selling it the moment it gets listed. The reason it's bad is because that means you're losing money the moment it gets listed if you're anticipating things to go up, because they're basically just taking profit on your ass. How can we prevent this? Absolutely no idea. I'm actually really unsure how you can prevent insider trading, except for just a policy and better enforcement internally by saying, you know, guys, don't do it. If we catch you, we're going to whoop your ass. But even then, as I said before, if I, hypothetically speaking right now, have a company that's going to launch some crazy product at some point, and I tell a friend of a friend of a friend, and he starts to buy massively, how can they know, right? If I'm telling my brother, sure, they'll find out. If you're telling a friend of a friend of a friend, and that guy's not a dumbass, that's why I think insider trading is such a common thing, yet the ones that get found out are being made as such a big example because they're just really ridiculously stupid in the way they're doing it. Again, I'm not 100% sure. Maybe it's way more elaborate than I'm thinking. Maybe they're monitoring this really freaking closely and it's very hard. Or the way I'm thinking, okay, I don't want to talk about the Pelosi situation, but let's just say it like this. If some people have gotten away with it for such a long time that I'm thinking, well, they did it in a really dumb manner. How about these people that are smart? But I digress. And there's actually one more thing that's basically bound to happen, right? Breaking. Ethereum developers completes all preparations for the merge. There's basically going to be a lot of manipulation surrounding the Ethereum price, or actually of the Ethereum price surrounding the merge. It is most likely already happening right now as we speak, as the price is going up, even though a merge by definition is not going to change too much. And people will notice that as the merge comes closer. You got to understand, merge is coming around September 15th. Most likely the price will pump pretty close until that point and then actually dump like crazy. A lot of people are already taking profits right now because Bitcoin is going down just a little bit. Actually, Bitcoin now is at a very interesting spot as we described earlier. Right now we're bouncing off of the 200 weekly moving average, which has historically been a critical point. Again, guys, a little while ago, I expected or predicted or told you guys, I'm expecting a relief rally towards $28,000 per Bitcoin. That was when the price of Bitcoin was roughly around 19,000 because we were at our Fibonacci level, because we were at the top of the 2017-18 high, and because we had ourselves a pi cycle bottom, an RSI indicator here. All these signs were saying, hey, this is a perfect bottom for Bitcoin right now, and the price has already, since that specific $19,000 point, gone up roughly around 30% or so. But there's a lot of things which can kind of mess up the flow. The recession talk is quite a popular one right now, but even the Ethereum merge on its own, it could actually dump so severely that it's going to take the entire crypto market down a notch, in the same sense that I believe the moment that Ripple settles with the SEC and XRP gets proper clarity in the US is going to ignite the entire new bull run, because altcoins will be in such a bullish state as some altcoin has now finally gotten the official regulatory seal of approval. Yeah, and the same thing might happen to ETH right now, that people are trading it so severely and being so bullish on it, overly bullish, that the moment the merge comes and it crashes hard, which again is not a guarantee, it might actually still pump because of some manipulation on the short term, maybe even a midterm. Manipulation is really crazy in this space, guys. You know that people are making massive amounts of profit through this manipulation. Just think about it, for example. JP Morgan predicts huge success for these exchanges. Coinbase will have a blast when the Ethereum merge goes through, which might mean that they want to push the price, for example, with maybe a couple of other exchanges, want to push it up and pay a good sum for that to potentially cause a really big rupture in the scheme. Because a lot of people are trying to go short, for example, they get liquidated, a lot more volume afterwards because of this big shock, and the crypto price space just goes wild. A lot of volatility, a lot of volume, a lot of money they're making. There's a lot of possibilities. But at the end of the day, it does not matter too much. I'm holding crypto for the long term anyway. So yeah. I guess that was it for today's video. Be warned, stay cautious in crypto, guys. Always, always, always be on your tippy toes, because there's guys out there trying to take your money. Know that not everybody plays this game fair. Crypto is definitely not an easy space to be in, but I think an easy thing to understand is if you just keep on buying and chilling, just waiting it out, it'll most likely be a pretty prosperous endeavor. Again, I'm not your financial advisor, but I think it's quite logical that this investment is the standard. We talked before in my video about Q&T. I explained to you guys just how huge this is. I have that same feeling for a lot of altcoins. Just buy them and wait. Most likely things will be good. And even Andrew Tate is pretty bullish on the matter. Andrew Tate endorses Bitcoin, saying money is trash. With crypto, I always see it like this. They can never take it from you. Even if they really want, they can never, unless you're dumb with it. That alone is a very, very good reason to just hold it, I guess. But yeah, that's it for today's video. Hopefully you guys all enjoyed it. If you did, make sure you press the like button and subscribe. Check out my $10,000 giveaway. And adios, amigos.